Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding Wall Street hype. As we always say here, the charts tell the truth. Now as we get into today's daily video here, I'm going to focus in on a few key technical levels. Again, today's date being Monday, March 3rd, 2008. First little thing I want to mention is that I am sitting here in the airport in Tampa, Florida, after dealing with some business over the last few days, as well as a little relaxation. So you will hear some things in the background. Just avoid them and just focus in on the charts, as we always say. So taking a look here at the charts, guys, we had a basic lackluster day. You saw the Nasdaq trading down. The Nasdaq was the weaker of the indexes, so you can look at, as a whole, the market divided into sectors. And again, the Nasdaq we mostly associate with being the more technological sector, obviously, and that was the weaker one today. You saw Google, Baidu, Apple, Research in Motion, Amazon.com, all getting smacked down pretty hard, considering the Nasdaq was only down 12, almost 13 points. In addition, you saw the Dow basically flat. The Dow lost about 8 points. That's nothing, considering it's over 10,000, 12,000 points index here. A 10-point loss or an 8-point loss is what it was down today is nothing. And again, the S&P actually closed slightly to the positive side. So again, focusing on the weaker, the stronger sectors, you can look at the Dow and the S&P being the stronger out there right now, at least in today's trading action, while the Nasdaq was the weaker. Now, you had some interesting things going on today. Number one, we did see the Fed have an emergency meeting. Now, nothing has come out about that meeting, but we did focus on in the chat room today on that emergency meeting, which was scheduled for 11:30, and that's 11:30 a.m. Eastern time. Now, the question will be, does anything come out of it? In my opinion, I would not be shocked to see a bailout plan for the bond insurers, for these insurers and banks, and I would not be shocked to see another rate cut prior to the March 18th Fed meeting. Now, we all know what that means, folks. That means you got to be on guard here. You can't be jumping on the short side at this point. All right. Now, again, there's pivot points and pivot days, and I really want to focus in here once we get through the daily charts. So again, let's focus in on the intraday chart first, and let's just go over it. And you can see here you had the up and down movement in the markets, and it was just a whipsaw day in a relatively tight range compared to what we saw on Friday. Friday was a dramatic fall. And the key here on Friday's action is that we always talk about this, how after a big day, whether it's a big up day or a big down day, you often have a pause day. Now, a lot of people out there look for that continuation to the downside after a big fall or continuation to an upside, but oftentimes you'll just have that pause, and that's exactly what we had today. So you can see over here I drew this pink line in, and it basically focuses in on the 20 moving average as you're dipping below and above the trend line I drew in. Now, the key here, guys, is that you're just looking at a market that's flip-flopping up and down every which way, although in the afternoon they tried to fake some people out to the downside. Notice this here. All right, you got a hard sell program for about half an hour to 45 minutes here, where they broke the lows of the day. All right, notice the low trigger, but again, you don't have the significant movements to the downside. You had a break of that line where you closed below, but look at the next candle. It did not take out the low. You did not to confirm to the downside. In doing so, you have to notice that you're going to have an upside potential as you do. Once you get back above this line, once you close right here, off to the races to the upside. But again, notice here, look at, they faked everyone out to the upside. Got to close up here at the highs, but it did not break the high of the day here. All right, so for instance, you really had to see a break of this high right here to see continuation of the upside. The market did not do that and came down to close basically right on the trend line I drew, which you can see in pink. All right, so focusing on that pink line, just notice how the market whipsawed back and forth. Now, again, as I mentioned, there are key breakdown levels and there are key breakout levels. And we are sitting right on top of one at this point, which is the February low. So I'm going to look at the SPY daily now. We're going to focus in on the daily. We were just looking at the intraday chart of the E-minis, which is best because we see dramatic moves in that and a little clearer on the chart. But what you want to focus in here now is the daily chart of the SPY. And on the SPY, this is still the low to beat. Now, if you want to talk about a breakdown point, the pivot point here would have to be a close below this February 7th low, which is this low right here. That is holding support. You can see we began to test it, but each time we're pushing back up. Notice we had a little tail today on the bounce side where we were down lower, but we closed to the upside and actually created a little bit of a green candle right there, showing a little bit of buying coming in. Now, the question again will be, where do we go from here? Volume was on the light side today. Again, a lackluster day. Everyone kind of taking a breather from that pounding we took on Friday. All right, so again, number one point to watch, February 7th low. It's easily seen. You just draw a trend line from the bottom of that February 7th straight across to the lows. Now, us at InTheMoneyStocks.com, we're not sold on the downside yet. All right, a lot of people are jumping ship saying, all right, we're falling down. We're not quite sold on that yet. There's too many things up in the air. You have the Fed meeting today with a surprise meeting. That's number one warning signal. Now, you have to keep in mind that a lot of people out there were expecting an announcement today. You know that's not going to happen. The Fed never meets and then comes out and announces their decision right away. What they usually do is talk about it, discuss it, come to an agreement, and then give it a week or 4 days or 3 days or so forth, and then we may see an announcement. So also note that nothing ever happened when the market expects it. So the market's alerted to a Fed meeting today, and everyone's on guard. You know they're not going to come out. They wait for the opportune time when no one expects it, and then they come out and save it. Like, for instance, a couple Fridays ago when we were down quite a bit, and all of a sudden at 3:30 we had Gasparino on CNBC, breaking some news here to the markets about that possible bailout of ABK, I believe it was, and the market just took off to the upside. It was Friday afternoon, it was 3:30, no one expected it, and off to the races you see the market go. All right, so that is something to focus on here, and we also want to just draw on a few other trend lines here, as I like to do always. It always gives us the best picture of where this market is going, and you can just focus in here. You have the trend line that broke down, and this was a near-term breakdown. Notice how the market had been following this line, which is the lows here from February, all the way up here, and once we broke that, look at the fall you got. So now we have fallen through that trend line, and you're now sitting on top of this new February 7th support line. So that is the key number here. And again, I apologize for the announcements going off. As I said, I am in the Tampa airport after dealing with lots of business over this last few days, and a little R&R as well. And we always try to improve our business for our subscribers and continue to add new programs, new seminars, new connections, so everyone can continue to learn and benefit from subscribing with us. All right? Now, again, what I want to mention before I get into any more technical analysis here is that we do have the E-mini chat involved with the day trading chat. So those of you that want to come and trade E-minis, the futures, you can join the chat room. We don't have the link up under the E-minis yet on the website, but if you just purchase the day trading chat, you can be involved in that. It's the same price. It's going to be the same thing. Now we've added a new feature to the chat room. So for the same price that people were only being able to trade stocks with, now they can trade both if they want. We have the moderators and the traders calling out E-mini plays as well as stock trades, and if one's slow, usually the other one can make up for it, and you can trade both this way and get double the benefit out of it that the price of $199 was offering for one. It's a phenomenal value, and we're ultimately going to have to raise the price, guys. There's no doubt about it, now that we've incorporated both and that the chat room is such a benefit. It's minute-by-minute technical analysis, questions, answers, you name it, it's done, plus the calls, and the moderator that trades the E-minis has been on fire lately with his moves, and I do congratulate him on that and encourage everyone to come and join. So now let's continue to focus here on the chart. So again, we have this line here, which is the breakdown line which we took out. Now you have this line forming, and this line is going to be an interesting line because we have to watch the February 7th low. Should this break, and there's no doubt in my mind that we will have to touch the lows. Now remember, it's not as simple as just a puncture of that line. Should we dip below intraday, that doesn't mean we broke. Even if we close below, you want to see a continuation the following day, just a small, you just don't want to see a reversal candle. And that's what I always caution you guys on, because there's so many times where people get faked out by that. Meaning that you have a red candle that cuts through the line like this, and everyone jumps short right there. Okay, well that looks like a breakdown, right? But then you have a positive engulfing candle the next day, which gets you right back above the line. Everyone gets caught off guard. The shorts get squeezed. There's a massive rally in the market, and everyone goes crying. And you just don't want to get caught off guard like that. So please be careful in that situation, guys. All right, there's no need for anyone to get caught off guard. Follow the technicals, follow the charts. You will make money by following the technicals, charts, time pattern, and volume keys. All right, focusing on that, you'll do fine. Let's look at the Nasdaq now. I want to take a look at the Nasdaq as we focus in here, because you can see a much weaker chart. Notice the trend line here, guys. The Nasdaq, remember the S&P, let's flip back to the SPY here. Notice this pattern, guys. Generally, you've had a relatively strong up move here from the lows. Now look at the Nasdaq's chart, way different. Notice the sideways trading. So the Nasdaq's very near this low here. In fact, it's been knocking on the February 7th low. So I'm a little more worried about the Nasdaq, because we did pierce that line. Now they saved it, and we're at support here. But the fact that it's in a much more sideways tight range worries me to the downside. So the Nasdaq and technology continue to be on the weaker side of things, although any type of bailout will rally everything. A bailout of the bond insurers and any of the banks will be phenomenal for those plays, no doubt about it. They'll go up huge. But in the same motion, I should let everyone know that technology will be lifted as well. It might not directly benefit technology, but in the scheme of things, if money's easier to borrow, if these banks aren't going to go out of business, it's going to benefit every technology play, every bank play, every sector out there in the markets. So be aware of that. Yes, the Nasdaq is weaker, but should we have a rally here, and again, until we break February lows on all these indexes, you have to somewhat favor a bounce to the upside, in my opinion, because you're sitting at support. Now we break it, you just have one day close here, and then the next day trade slightly lower. Well, then we're going to look for some more downside in this market and a retest on the Nasdaq, as well as all of the other plays on the downside. All right. So that's the basics of it, guys, and we'll come back with a more in-depth video tomorrow once I'm not in an airport getting distracted by lots of little things. But the key here, guys, is that just follow the charts, come join the chat room, come join the swing trade alerts, and the rest will take care of itself. We're doing webinars now starting up. We'll be announcing some new dates for webinars very shortly. Come get on board with those. In fact, keep in mind, we're going to have lots of new partnerships available as well to increase all of our services to our clients and the value of them. Have a wonderful day, guys. I'll talk to you tomorrow.